Momentum Reversal E-mini S&P was the trade of the day, capturing this rollover. You can see how the market moved higher initially, which presented a head fake for many of our strategies, and then it rolled over. Momentum Reversal E-mini S&P up 2,500 on the day. The results were down on the day though, minus 7K trading one E-mini in a 500K account, minus 2.8K trading a 200K portfolio, trading 4 micros in a 200K account, and then minus 700 trading 1 micro in a 50K account. And so these are hypothetical results. We are not trading it right now. The market is experiencing very unusual price action based on my observations and the way I trade. And while head fakes and choppiness and stop running are normal, we can deal with head fakes. We can deal with choppiness, we can deal with stop running. Those are all things that have always been in the market. Lately we are dealing with that, what seems to be approaching nearly 100% of the time. The percentage of time these choppy markets occur are much higher than normal. You're if the market trends 20 to 30% of the time and it chops 70 to 80% of the time, these might be more normal numbers, and these are mainly on daily charts. On intraday charts, this feels like a trend is about 1% of the time, and a chop is about 99% of the time, or 95% of the time chop, 5% trend, and so it's extreme. And so it's interesting because there is a constant bullish sentiment in this market, even though we have sold off into what's considered bear market territory because of how high it sold off from the highs. The market does not act like a bear market. It acts like a bull market still. Everybody, the consensus, the sentiment, the way traders are thinking, buying the dip and talking about testing these lows, and as if we are in a longer-term bull market. But we'll see. The Federal Reserve policy tends to dictate the direction of the trend the most, and it would be bearish. The policy is bearish if implemented as it's said to be implemented. So that's always in question. But it's been challenging. We're on a research break. These are hypothetical signals that we are not taking right now, just tracking. And these are our stock index 26 portfolio. 60-minute breakout, took a trade minus 625. S&P counter trend took a trade minus 825, stopped out there. Could have used a bigger stop. Cobra 3, this was a nice trade. Even though it was stopped out, it traded properly, and just the market just rolled over on us based on the head fake. Those are the ES trades. 1 for 3 on the ES as far as trading system signals, and no trade today on AT 2022. The vertical red line represents a day, and so from this vertical line forward, there's no trades. EVP1 got short, market rolled, reversed on us, big sell-off at the end of the day. So the market did kind of sell towards the end of the day, going as we are in the last day of the month and the last day of the quarter, sold pretty good into the close, but it did bounce too. So EVP1 stopped out there. This one had 2 nice trades yesterday. So this was down the gap continuation, took the long trade, looked like we'd go higher. 2022, same thing, stopped out. Tick reversal, first trade was long and lost. Short trade was profitable. The short trade was less profitable than the long trade stop loss, and so it was down the day. But the last trade of the day and month on tick reversal was profitable. And then tick pulse just stopped out. Just could have used a bigger stop loss on this. Would have been a nice short trade. SR counter trend 2 profitable here. Tick pullback, took the long side, postured higher. Looked like the market. I thought the market might make a run at 11,500 today, or even Wednesday's highs, because we see those scenarios where the market makes a big move higher and then it completely reverses, and then on the third day it completely takes it back. And based on the chop we've had, I thought we might have this kind of a day, but we started it and then it rolled over, took out the lows, closed on the lows of the week and the month and the quarter, and so not at exact lows, but the closing lows. And so tick pullback down the day, and then Cobra 3, this is one of our top strategies at recent equity peaks, stopped out here, And those are the trades on the day. Again, down day, last day of the month, last day of the quarter, doing our research, trading incredibly challenging time period. This could be a 40-year regime change. Direction in bonds is interest rates are higher. We had about a 40-year bond bull market, which means interest rates have moved low, pretty much moved lower for 40 years from an all-time high in inflation all the way to 0% and stayed at 0% for a very long time. And now we're moving back towards normal interest rates. Interest rates affect the stock market in so many things, in so many ways, and so that's another thing that can affect our trading systems as well. And so that's why we're taking that research break and working on better strategies for this market right now. I made a video earlier about long-only strategies, so that's something to consider as well. We will have more soon. Have a good weekend, end of month and a quarter. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.